Everyone is watching the stock market. Everyone is watching Bitcoin. Everyone is watching interest rates. But the next market crash won't start where everyone is looking. It will start quietly, boring, almost invisible. And by the time headlines catch it, most people will already be late. In 2008, the real warning wasn't the stock market crash. It was subprime loans, something nobody cared about. In 2020, it wasn't COVID at first. It was a liquidity freeze behind the scenes. Crashes don't announce themselves, they whisper first. And right now, something is whispering again. The next crash won't begin with stocks falling 40% overnight. It will begin with pressure. Pressure on middle-class spending, pressure on small businesses, pressure on jobs. The real danger zone right now is consumer debt mixed with corporate debt. People are spending more than ever, not because they're richer, but because everything costs more. Rent, food, EMIs, subscriptions. And how are people surviving? Credit cards, BNPL apps, personal loans. This isn't growth. This is stress disguised as consumption. Here's the part most people miss. When inflation stays high and incomes don't rise fast enough, people don't stop spending immediately. They borrow. That keeps the economy looking fine on the surface. Markets stay up. GDP looks okay. Companies report revenue. But under the hood, defaults start rising. EMIs get delayed. Minimum payments replace full payments. And once defaults cross a tipping point, banks tighten lending. Companies cut costs. Layoffs begin. And then the real crash starts. Not from panic, from exhaustion. This is how crashes actually happen. First, people struggle silently. Then debt stress increases. Spending slows down. Company profits fall. Layoffs rise. Fear hits the market. Everyone reacts at once. By the time fear shows up, smart money has already moved. Retail investors are always shown the crash after it's too late. Why is nobody talking about this? Because this crash doesn't look dramatic. No single villain, no sudden explosion, no breaking news moment. Just millions of small financial decisions slowly breaking the system. Media loves fast crashes. Slow ones don't get clicks. And markets can stay irrational longer than people can stay solvent. Smart money isn't watching daily stock prices. They're watching credit stress, job market cracks, consumer spending patterns, corporate debt pressure. When borrowing becomes survival instead of growth, that's the signal. This isn't about fear, it's about preparation. Build liquidity, avoid over-leveraging, focus on quality assets, protect your income, stop chasing hype. Crashes don't destroy wealth, unpreparedness does. The biggest danger isn't a sudden crash, it's assuming everything is fine because nothing has exploded yet. The next market crash won't scream, it will quietly drain people who aren't paying attention. Stay aware, stay flexible, stay ahead. This is Finance Rool.